Some people have so much money sat in an easy access savings account. I'm going, what do you need it for? What is the reality that you're going to be able to have something happen that means you're going to get your hands on half of that?
Unless I know, like you said, it's definitely working. If it's definitely working, then I can turn and say, bro, Tom, you've got to get on
One guy who's got loads of money, apparently. You know, that's the only people you tend to hear talking about money. The ones who think they've got loads and making loads.
It's the one who think. You see the 3 brackets, lads, I can afford it. Take me at that game for 3 months. You see how much longer I can afford that? So that's rich, not wealth. Wealth is like, I don't actually work.
So many people have pay for extra warranty or pay for extra service plans or pay for all of these, pay for car insurance. And they'll spend a fortune on that. The whole thing, insurance, warranties, service plans, all that stuff might add up to £200-300 a month, depending on the vehicle and the age of it and all that kind of stuff. And then I'll say, oh, here's £50 a month to make sure that your family are never going to be, you know, without your.
Welcome to the Today We Won podcast. I am so happy to be here. I'm so happy to be here. It's another friend, another brother, another wise soul, another mentor. I stay around these people. These people keep me on top of my game, and I'm gassed to be where I'm at. So with no further delay, I want to introduce you to the financial man, Tom Sawbridge.
Thank you. So yeah, as you've said, I'm Tom. Financial advisor. Happy to be here. Happy to be talking about. Happy to be talking about money with you. Because you know what, not enough people talk about money.
No, 100%. I agree.
It's something that I don't know what it is. People avoid talking about it. They don't talk to their family. They don't talk to their friends. They don't talk to anyone about money. And we're in this country, we're different from other people for that reason. But apparently, I don't know this for certain, never lived in another country, but still, apparently people in other countries will sit around a dinner table and say, what are you doing with your money? What should you do? And so, therefore, what we find ourselves in the situation of in this country is people sort of just finding out ways to use their money and invest properly and protect themselves just by luck or by chance or by finally biting the bullet and go, you know what, let me speak to an advisor. And it's so it's a weird thing, and the more people talk about money, the more people talk about doing the right thing, the better. And if one person watches this and goes, you know what, that might help me, then I've done my job today.
Yeah, no, I agree. I was just listening to you talk. I was waiting for you to finish, because I feel like there's a lot of not necessarily competition, but am I doing this right? Am I doing that right? You know, if you're doing something and you've got to go away and do a venture on your own, we tend, I say we, just as a maybe a nation, and we tend to discourage someone going for something they want through trying to protect them. And then that means I'm not going to share a lot of things. And then when it comes to finances, it's quite personal, close to your heart. Sometimes you don't want to be told, you ain't doing the right thing giving money. You spent that again. Oh my God, look at this, look at this. And you get so defensive that you end up holding your cards very close to your chest. And that means that all your mistakes are your own. But then all your successes are your own. Which is brilliant. But if we're not making enough successes, then you just lumbered in the general population amongst the mistake makers, if that's
the more people talk about it, the more successes we will have, and that's a simple thing.
And that's true.
I think about this all the time. Like, people will be sitting in the pub or having some food or whatever with like 2 or 3 of their mates. You can have 4 people there, not talking about money or how they're making the most of it. And that's all because all 4 of those people might be thinking, I'm not doing well enough to be talking about it. Do you know what I mean?
Yeah. I haven't earned enough to be able to tell you what to do with yours.
Exactly. But 2 or 3 of those people could be doing something brilliant that could really help the other people, because no one's talking about it, because everyone thinks maybe I'm not making enough money to you know, give people advice or tips on it. Then nobody wins around that table. Nobody.
Or stepping on toes. It's like, I don't want to look into your pockets, but unless you say I need help, I'm not going to go out my way to help you with something unless I know, like you said, it's definitely working. If it's definitely working, then I can turn and say, bro, Tom, you've got to get on this. This is coming through. I don't know how long it's going to last. Just jump on it, get Sarah on it, do what we can until it frigging, milk the cow until it stops type of thing. You know what I mean? Cash cow.
Yeah, but there's certain things that have always worked and that will always work that people just don't do because they're skeptical for some reason, or they're a little bit nervous about doing it, or
habits and routines. And what you said, you don't buy into it. So you've got habits and routines, which is, well, every weekend I go to the pub. Well, every weekend I have a takeout. I've got to go to see Tom at the frigging pub. So that's 50 quid, right? And then, well, you want me to go to the drink or just drink pop? So that's definitely 50 quid. And then we're going to say, right, every Saturday, I take my kids after a football game. So you have your routines, but then I don't buy into it. So it's like you said, unless you're winning at it, I'm not going to stop.
Yeah. Do
you know what I mean? Because my habits it's now I'm on autopilot.
Yeah.
And that's a bit of an issue. Autopilot drags people away from buying into something new. Time comes along. Let me talk to you. I don't have time.
Yeah.
Bro, we're not even on the main street. We're in a frigging pub.
Yeah. All you're thinking...
It's going to cost me money. That's why I don't have time. I'm walking quick. So I'm thinking, brother, I ain't got time for Tom's pockets right now.
That's it. And a lot of people, it's one of the first questions as a financial advisor that I get asked. How much is it going to cost? What are your charges? And I sort of have to say to people, and it's different for everyone. I should sort of point out as well that any of the information that I give during this is just for information. It's not advice.
100%. It's not
because
advice.
of the regulated nature of what I do. It's not advice, but it's information that I can share.
If it helps you, it helps. But we ain't giving. We're not guiding any.
No, and if you want to do something or look into something that we maybe speak about or get onto, then just seek advice and make sure you get it right.
Yeah,
basically,
that's a fair
people
point.
will say to me, "Well, how much is it going to cost me?" And I have to say to people, the way that I work, until you're happy with something that I come up with, it doesn't cost you a penny. So many people who are thinking about what should I do with my money to get it right could be having a free financial review, and even if they do nothing with me as an advisor, walk away from that thinking I'm getting it right, or there's something I need to think about in the future. Well, people don't go out of the way to do that, but I don't know what it is. I think
it's the cash. It's the cost, not the cash. It's the cost. It's the initial thought of the cash. I've got to jump in there because I am the people in this conversation. It is the cost because, like I say, even if fortunately you're a solo band, so I could contact you on socials, which is brilliant. The socials should be coming across just here. But the point I'm making is, if I've got to go into a bank, then I could potentially be setting myself up. As in, I go into a bank, I'm going to ask for this, they're going to say, well, you can't afford this, or you're clearly not doing this properly, or it's going to cost you money. So then the thought is, I'll do it myself. Remember, we're not talking to friends and family at best, mum and dad. At best. Do you know what I mean?
Or even your best mate that you don't mind sharing absolutely everything
but it's always one or two. It isn't like, it isn't globally known. You don't share it with a lot of people. It's held quite close to your chest. And it makes it a lot harder to absorb that information. So then you don't ask for it. And then you don't look for it. And even though it's broken, you still don't look for it.
And let's be honest, it's an uncomfortable thing, isn't it? You know, one of the first things that I say to a new client who's approached me for some help, I say, I'm going to send you a questionnaire. It's going to take you about 20 minutes and it's going to ask you everything about your financial position now. And that's an uncomfortable thing because everyone has got something in their finances that they're not quite happy with. It might be their income. It might be their overdraft. It might be what they've built up on a credit card. It might be that they feel they should be doing better at that point in their life. There's all of these things that people associate with their money, which once you talk about it frankly and openly and honestly, you feel better about it just for doing that. Once you talk about it frankly and honestly and then come up with a plan to change it and get to where you want to be, even better. But it's getting over that hurdle of, this is uncomfortable.
That's the thing. But I feel like that's everyone. If you got too much money, you don't want to talk because you don't want people to know. If you ain't got too much
There's
money,
always that one guy who's got loads of money. Apparently, that's the only people you tend to hear talking about money. The ones who think they've got loads and making.
It's the one who think. You see the three brackets. There's there's probably more, but I'm just going to roll with this. Okay, so then you've got general population. Then you've got the people just above them, we'll call them middle class. And then you've got the people above them, we'll call them wealthy. I know there's more stages, but that's what we're rolling with. Now, the reason why I word it like that is because lower class will buy some things because they feel like you're worth something. The middle class will buy the expensive stuff. So your M4s, you did it. I'm making good money. I'm on like $5,000 a month, or $5,000 a week. I don't care.
Yeah.
And then you've got the people on top who like own businesses. So the people on top who own businesses, you watch what they're driving. They're driving a beat down Honda Accord that don't know.
Yeah.
The watches are sassy cold, don't even look pretty like this. Do you know what I mean? Like he's looking plain as Jane and he owns the whole neighborhood.
Yeah, and I heard a great saying once, and I can't remember who said it to me, but I've always remembered it. And the saying was, money talks, but wealth whispers.
Oi.
Because
that's nuts. That's nuts. It's true.
I saw from working in the bank, I worked in the bank from 16, and I used to see it every day. Someone who comes in looking $1 million and they ain't got
much.
Yeah, they're
in
not
comparison,
wealthy. Yeah,
they're not wealthy. It's wealth. You may be rich, which is short term, but you don't have wealth. Wealth is long term, tomorrow, next month, next year. Rich is like in this moment now, you're doing good. Sorry to take it, but so I can afford this I'm earning $5,000. That's the same month. So I've got my M4. It's costing me like, I don't know, grand, including insurance and all that. So that's $1,000 written off. The house is like 1,500 to $2,000. So that's $2,000 written off. My other half's working and got money, but we ain't even including that. I'm going on holiday with my lads. I can afford it. Take me at that game for 3 months. You see how much longer I can afford that?
Yeah.
So that's rich, not wealth. Wealth is like, I don't actually work. What do you mean? What do you mean? Well, I've got properties that I rent out. I've got shares in crypto. I've got stocks and shares on the stock exchange. I've got blah, 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 blah. My money works for me is what I'm telling you. So I don't really work. I'm not bragging. And it's when my voice comes down, it's wealth whispers. Oh, that's good, bro. That's good. That's good. And the reason why that is so good, bro, is because it's true. You see, when a man's got money, they say we talk. And it's like, bruv, don't even be cheap. I'll just cover the bill. What? So we ain't splitting? No, because everyone's got money. Next week it's you. It's a £500 bill.
Yeah.
Do you know what I mean? Well, when man's got money, but he's rich. Hey, bruv, I've got my 100. Yeah, we put that there and then everyone just pile on top.
Yeah. I refer to it, I'm dropping a video on it in the next few days, as what I call the middle class trap. Wow. Right? And what the thought behind the middle class trap is that you might start out with not much in life. Most of us do. I didn't really start out with a wealthy background. I didn't suffer as a result. I had a great childhood and I'm really, grateful for my parents. But we didn't have money. And so what happens is a lot of people in sort of that working class bracket.
Yeah. That's not lower class, working class. Sorry,
they then might land on a good job, or they might start a business that does well, or they might fall upon a skill that they're really good at. They might be a great electrician. All of a sudden they're really busy, they're making loads of money, whatever that might be. And so as soon as they get into that bracket, before they think, okay, how can I make this work for me in the long run before I start spending, they go, I've told people I'm doing well now, so I need to look like it. And then they go, well, I can't now be driving my Renault Megane. I need to go and get a better car. And it's exactly what you said. So then your car bill goes up through the roof from what it was. It might be 300% higher than it was. And then you go, I can't really be living on this estate now, telling people that I'm doing well.
Got money.
Yeah, exactly. So I need to go and buy
mortgage
a big
doubles.
Yeah, exactly. And so what happens
holidays increase.
Yeah. You need
it's not all inclusive. It's now 4-star, 5-star, plus all inclusive. And you know what I mean? Like,
that's it. And so what then happens is it becomes a trap where you could have just taken a step back and gone, how can I make this work in the long run and become wealthy? So in 20 years time, 25 years time, me and my family after me are going to significantly benefit from the extra money that I'm making now. They don't do that. They go, I need to look wealthy. And in trying to look wealthy, never become wealthy. And it becomes a trap that it's really difficult to get out of, because once you've driven that M4, once you've had that bigger house, once you've had these nice experiences, it's really hard to give up. And so it's a trap then. You never build wealth.
You don't.
And then you speak to someone like me when you're in your 40s and I'm going, what are you doing when you retire? And they go, I haven't really thought about that. I'm just going to have to work until I'm in my 70s. And I'm going, you're doing really well. But then it's like, I don't want to give up all the things that I've got used to having. And so you never truly become wealthy. You do better than you ever have done, but it's a trap that you fall into that just stops you from ever getting past that entry to middle class and that, doing slightly better for yourself.
So let me just ask you then, my bro, because we got talking, that's just me and you. But how did you get into this financial mindset? So if we where did your financial journey start? Roughly, just roughly, because you said you didn't have tons of money when you was younger. So it wasn't like mum and dad had loads, you were sorted, everything's fine, and then you just fall on my feet. Do you know what I mean? Like, it wasn't like that.
Yeah, I mean, it's interesting you use the phrase fall on my feet, because my mum actually said to me when I landed my first job in the bank, she was like, "Oh, you fell on your feet again." And it's just because
So you
I've
did.
always,
So you're thinking,
maybe.
We're talking about him, people.
No, but I was 16 and I wanted to be an accountant, right? That was my decision that I made at school. I was good at maths.
Yeah.
I thought, how can I make this work for me?
Blossom,
and I started doing my A-levels, did maths, economics, business, and for a year I was bored, and I'm talking, but I was thinking, I can't do this.
I thought, you're good, you know, bro, because you just give me that list and I thought, oh gosh.
Yeah.
Please
dropped out. And then during that time, I got a job working in the bank on a Saturday, like a Saturday lad on the counter, just as a cashier, just to earn a few quid. And I thought, I really like this. I really like this. I was sat there on a counter in the bank, speaking to all manner of people. I could be serving a millionaire one minute, the next minute someone who, who's on benefits and really struggling. But there was a way that I could see to help everyone. No matter what your position is at the moment, there's always a way that you can move forward and change something to become better off. And so at 17, I then landed a full-time job in the bank as like a personal banker rather than sitting on the counter. And that, for me, I thought I'd made it at that point. I was 17, I thought, I think I was only on like 13 grand a year or something. I thought, I've made it.
A full-time job, mate. 17.
Yeah.
You got to wear your suit.
Yeah, exactly.
Did you love the suit?
I used to.
I loved wearing a suit. I don't wear a suit all the time. I can't remember the last time I wore a suit. But I loved wearing a suit. Office jobs, I loved wearing a suit. But that's cool. So carry on.
Yeah, so then, and it just built into a career for me. So I worked my way through the ranks. I was there for a long time. Finished in the bank when I was 33 last year, start of last year. And worked my way through the ranks of, being a personal banker. Then I was a business manager. So I was talking to people who own businesses, and I got to see the inner workings of that.
Yeah.
And, I spoke again, different size businesses, one-man band electrician to, someone who owns a fortune of properties.
Am I right in here in an invisible drone?
No, it's not just you, bro. I can't see it.
I can't see it, bro. Yeah. Sorry, guys. Apologies. It's staying. But we just had an invisible drone.
Be cool next time. There's always going to be something, isn't there? So I went from seeing how businesses work, and then I became a bank manager, and I did that for nearly 10 years. And that was me helping other people to help other people. And that's what I really love doing. And so then I had an opportunity to come away from banking, because banking, as it was that I was in, which is high street, branches are closing, it's a change in business. So I wasn't doing what I used to love doing, which was sitting in front of people and going,
people.
Yeah, what are you doing with your money? How can I help you to improve? And so I took the opportunity to take some redundancy, step away, and I thought, how can I recapture what it is that I love doing? And I thought, I'm just going to set up my own financial advice practice. I'm going to take the leap, bit of a leap of faith. It's a lot of risk setting up your own business.
So where are we advertising on this business, my brother?
So
because your link's on the page already, so you tell us where we can find you.
Instagram, so Sawbridge Financial Planning on Instagram, TikTok, Sawbridge FP. It's all the same content, wherever you like to get your content.
But you're on all the platforms. That's what I'm leaning towards. You're on the platforms,
LinkedIn,
Okay.
And then I have a website as well that people can check out, which is sawbridgefp.co.uk.
That's on there.
And that tells you about all the different stuff that I do. But again, even when it comes to my advertising, I try to keep the tone of it light-hearted. And the reason for that is a lot of people are financial advisors are just looking for wealthy clients. Yeah. They just want to speak to people with tons of money already.
That they can get, that they can help propel to the next level, but that they can earn something from as well.
Exactly. And in that sense, not targeting that kind of market probably means I'm making less money doing what I do. You know what? When I get to sit down with people who are everyday people who don't feel like they're wealthy and would like to create something for themselves in the short term, the medium term, or retirement, I can go, do this and this, and you'll be better protected on the way, and you'll get where you want to be in the long run. That's where I walk away, and that's where I feel a sense of
achievement.
I've helped people.
I like that because I'm very much like that too. Sorry, no, please do carry on. I always interrupt.
No, it's okay. Go on. You're like that too. Go on.
No, I am like that too. In other aspects, it might not be finances, but I like to help people. I like to help. I like to teach, but I like to be taught. So then when someone listens, then I'm like, I actually help them do that. I just totally empathize and agree with what you're saying then totally. So please carry on, bro.
Yeah, I think, as humans, where you truly get your joy, I think, I might be wrong, is where you can help people.
Serving.
Whatever that might be, if you can go out of your way to help people, even if it's something small, and that person's better off as a result of your interaction, I think that's where we all get a little bit more happiness. So, and I get to do that just via people's money, just from my experience in banking, from, talking about different things. And yeah, that's what I do. That's what I love doing.
And that's lovely, man, because like you just said, helping people, it is something in us. I've read a lot of books and I listened to a lot of audio books, but one of them was like, you won't really, I can't paraphrase in there, and this is going to sound a bit too perfectly fitting, but you won't really be happy until you serve. And I thought, no. But you're right. What you just said is right, because like, okay, let's give everyone £1 million. Not so we're all equal, but individually. What's the first thing you want to do? Okay, take all the people that want to go shopping and just blow it. Just put them to one side. The people that say, I'll start a business and have no idea about the business, but would start, brilliant. There's who I'm talking to. Those people now that say, I would start a business, you're helping people, you're serving, you're providing a service, you're providing jobs, you're providing opportunities for other people to jump on board, help you grow. Yes, you end up with the money at the end, but everyone still gets paid for their contribution. So that's service. And the older I've got, I do understand that the more you serve, the more that comes back, i.e. karma. But like you say, the happier you are, because it's those small hits of, I'm going to say dopamine, but those small achievement hits that you think, I did that. And you're not going to get nothing from there, or nothing from there, or nothing from here, but I did that. And it's just that little pat on your own back. That's nice. That's nice. Do you know what I mean?
There's not many better things than someone saying, you know what, thank you.
Yeah, you helped me.
Thank you.
You helped me. Because if it wasn't for you, I wouldn't have. You think, thank you, bro. I needed that. Do you know what I mean?
No, I get it. Totally.
You do, yeah.
I totally get it.
So this brings me nicely onto this question. I've got some quick fire questions for you, my bro.
Go on.
So there's a very quickly. So we're going to start from the top. So we've got hot or cold?
Cold.
Android or iPhone?
iPhone.
Sky blue day or walking in the rain? Because the rain's nice, but you get a bit wet, don't you?
You do, but there's something about a rainy day that makes you look at the window and go, it relaxes me. I don't know why. I shouldn't, and I should say, sunny day, but no.
Let the rain. Yeah, man. Bro, you know what? So no. Oh gosh, right. Just do it. So no. I've got to work away how to get these extra questions in without going on a rant. But side note, someone said to me, you have to be grateful for the rain because it helps bring the crops, it helps bring growth, and it's very true. We just associate it with misery. But actually, it does bring a lot of life, fruitfulness. Without the rain,
you know what it is about rain? It's the sound of it for me. Have you ever been in like a tent or a caravan when it's raining?
Conservatory roof.
Conservatory roof.
Yes.
Yeah. You sit there,
yes.
It sends you to sleep. Yeah. You know what I mean? It's really relaxing. So, it's not all bad rain. It's not all bad.
Generate new business or contact existing customers?
Oh, I enjoy both. Can I say both? No. Oh, okay. Okay.
You could, but I'm not going to let you.
Look after existing, because you know what, relationships is everything. If once you've built a relationship with someone and you see that developing, you catch up with someone over time, that's where things get much better. You can have a great conversation to begin with, but over time, that's where, better things happen.
That makes me happy to hear that, because as I nearly got myself in trouble then. As a customer who experiences certain TV packages, they only care about new customers. Once your 12 months is up, everything goes through the roof, and they're like, well, leave and come back and we'll look after you again. So that was that question.
But if they give you a fair price, you would never leave.
You wouldn't? You'd just be happy?
Yeah.
Oh, all right, a little bit of haggle, a little bit of negotiation. Negotiation. What was the compound interest? The thing where it goes up over time each year.
Compounding, yeah. So it's mad. Like, if you can just say, I'll cancel and go down the road to the next provider who will do it half the price, they're always going to be spending money advertising, chasing new customers. If they just looked after the existing customers, they would save money from constantly advertising. It's mental. I've never understood it. There must be something that I don't understand that is worth doing it that way.
No, I think so as well, because then what they do is they, gosh, just on them alone, but they, them, all of them, they, I can't, never mind, don't get no more trouble. Anyway, they, in their opinion, new business works because then I can say, Tom, I've just had 1,000 new people sign up. I've had 10,000, 1,000,000 new people sign up. Now, we know you're already existing, so the sound looks like everyone over here is already happy, and we've had 1,000 more come. We don't know that we've lost 2,000 and gained 1,000.
Exactly. There must be an element of that. There must be. I don't understand it, but
Skype calls or in-person interaction. So this is
in
business.
person every time.
Yeah,
in person.
I love in person. PS or Xbox?
PS.
Excellent. That's my broski. Early starts or late finishes?
I should be early starts. The best kind of people are early start people. Anyone who I speak to who's in a routine of early starts.
I'm an early starter, man.
Yeah, they're always the most energetic people. They've always got their stuff together. But I'm a late finisher. Sadly.
Playing football or watching it?
Watching it nowadays. I love watching it. I'll watch anything, but I'm old and I can't play as well as I used to.
Nah, I'm with you, man. Like, I could do that. What's he doing? And oh gosh, pull my back out just thinking about running.
If you don't play football regularly, then you try and play football, you're like, oh my God, what has happened to me? What has happened? Like 30 seconds in, you kick one ball, you're like, oh my God.
You send one ball across, you're like, yeah, this is me. You got to chase a defender, you're like, oh my gosh, what's the time?
That's it.
Okay, and then I've got here, so this last one is going out your way for people or have people go out the way for you?
Going out your way for people. Feels better.
And I'm so sorry. Oh gosh. I said this is the last one. The last one, the actual last one is pensions or life insurance. And that's because one, I commented on one of your posts regarding one today. But yeah, I have to add that in there. So I apologise that I've gone over 8 questions, but we're here.
Okay, cool.
Pension or life insurance, which one?
I can't. I'm not going to go
on this. I will let you choose both.
Okay, cool. Yeah.
But I would like one reason as to why you like pension and why you like so yeah, just a couple pros, couple cons on both. Then
okay, cool. I'll start with pensions. Pros. I mean, there's more than a couple of pros, and I could sit here and talk about it all day. The pros of a pension are choosing when you retire. Having a retirement lifestyle that you want and that you deserve after a lifetime of working. Cons, you have to think about the reality of it. So there's a cost. It's going to cost you along the way. Unless you invest in your future and make some sort of sacrifice along the way, then it's not going to work for you in the way you want it to. Fair. So it's a con in the sense that it's going to cost you, but it's a sort of necessary con to get there. Another con that people talk about is when you can access it. That was what I was going to let you finish. I was going to say, so at what point can I reduce this retirement age, my bro? So thinking about pensions that you can have for your workplace, that you can set up on a personal basis or pay from a company, you can't access that until 57. Okay. So if you've got plans that you want to make to do something before then, I mean, we're all statistically going to retire, so it's worth still, even with the 57 being the earliest that you can get it, making sure that you're investing. But if you're trying to achieve something before, I was speaking to a guy recently who wanted to retire at 50. A pension wouldn't have been right for him in total. It would have been part of his retirement plan for later on in his retirement, but you've got to then still make a plan for between now and then. So maybe that's another con that's worth thinking about. Not a con, just something that you need to know. In the back of your mind, just be aware of. Like, you're investing for the long run. You're not going to be able to get these funds until 57 by hook or by crook. You can't take them out unless you die and it goes to someone. That's the only time. So that's another thing to think about. So life insurance, my bro? Life insurance, a couple of pros. You can stay on track for your goals. Okay. So people talk about life insurance being just if you die. There's a whole financial protection conversation that you can have, which is around what happens if I die, or what happens if I get seriously ill with something like cancer or heart attack or stroke. Okay. What happens if I am not seriously ill, but I'm too ill to work, which is, I might be able to work for 3 or 4 months. Pull my back or something like, but I'm good. Yeah, I'm okay, but I need some. Go back to that, the guy who was only $5 grand a month and all these outgoings, and he was stuck after a very short period of time. Often I mean, I think the average is about 1.5 months in the UK that people would be able to survive on their savings before they have to, turn to whatever else, that they can do, scratch around or, be funded by benefits. And it's not the position you want to be in. So the whole protection conversation, which isn't just life insurance if you die, it's a very long answer to this question, but the point that I'm getting to is you can stay on track. So having the right protection in place means if you have just done your back in for 6 months, you haven't lost out on 6 months of investing in your retirement, 6 months of investing in your holiday funds, 6 months of investing in, whatever it is that you're planning, your wedding or whatever. It keeps you on track. The second benefit, the key benefit, and there is more than a couple, but I'll keep it succinct, is that it's maintaining your lifestyle of your loved ones if the worst happens to you.
Yeah.
And for me, that's hugely important. And the reason it's hugely important for me is because I've been in banking and I've seen it every day of my life. I've been in a scenario where people come into the bank and they say, my husband's died, I don't know what I'm going to do. I don't know what, and it's not that you look at the kids and think,
yeah.
You know what I mean? You're going through this.
You're not prepared to die,
no, exactly.
Not many people anyway, not many people.
And so you've got this whole situation that's left behind and you think, what would you want for your partner and your kids if you were to pass away? And it's statistically unlikely that it's going to happen, but it does, and it happens every day. And so if you wanted to make sure that they were good, if you weren't there to provide for them, you can do that. And if you were given a diagnosis where a doctor says to you, you've got 12 months to live, you're not instantly going, what am I finally going to do? You've got peace of mind that the whole process can be you trying to heal and recover, or see out your last days in comfort. And when you go, your family can grieve for you, but not be left in a situation where they're stuck financially, which would add a whole layer of problems to that.
That's fair. I also wanted you to just go on, talk a little bit about the living benefits. I haven't worded that right, but the benefits that you're available to with your life insurance whilst you're alive. I'd called them living benefits, but there's a term, it's called something.
Value-added benefits.
There you go.
So, and this is the third, you're giving me extra pros here, which is nice. I'll talk about it all day. But
the stage is yours, my bro. We're all listening because we need to know, you see.
Yeah.
If you feel like this, like me and all of them are, you said most people don't catch up with a financial advisor. Well, we have today. So we're going to get as much for our value for money.
You're going to squeeze every drop out of me while I'm here. Okay, fair enough, cool. So effectively, and this is the way that I see it, if you're going to take out an insurance, which is, going to be paid out if you become ill or pass away, that company are making money from you not becoming ill or passing away. So they want to keep you healthy. So what it means is you get this, benefit to both parties, where in a lot of circumstances, insurers will say, when you have a policy with us, there'll be all of these extra things that you get access to just for being a policyholder. So, for example, and it's different for different companies, and you shouldn't choose it based on the value-added benefits, because the key thing is to make sure you've got the right protection for what you're actually trying to achieve. But you could be sitting with life insurance that hopefully you'll never benefit from, and it's a strange thing. It's one of the only things that you'll buy, hoping you never get anything out of it.
Well, that's what I like, the living benefits. Yeah, do you know what I mean? Like,
and so you might then have a policy which goes, okay, even if you never get ill or you never pass away, we're going to give you GP appointments within 2 hours at 24/7, 365.
Okay, that's cool.
They might go, you can have second opinions on any diagnoses you get. So we'll send your file to another specialist who will look over it and make sure that you're happy that it's right. They might say, every year, you send us a couple of like pinprick blood samples, whatever. We'll give you a full health check every year to make sure that you see something coming that you didn't. And so all of these benefits can come as a sideline and a benefit to the policy that you've got, which means that it used to just be an outlay that you'd have, which is you pay for it and hope you never get any benefit from it. It's just that peace of mind that you're paying for. And I think peace of mind actually is a worthwhile thing to pay for.
It is 100%. It's a, sorry, Tom, just on that. You are not necessarily, let me just say it, you're a salesman in finances. I'm a salesman in cars. Not my day job, is what I did.
Yeah.
So what I'm saying is I used to sell gap insurance and preach, or not preach, but explain all the benefits. Gap insurance, highly important. Service plan, highly important. And warranty. I'm in the middle. Now, it is important, But when you need
benefited from warranties in the past.
I have.
When I have, it was so much easier than it would have been.
Perfect. But like now, we've had a problem with one of our lights. We've been told it doesn't come under warranty, even though it was something that we can break. And because I've sold it, I've argued the toss and da-da-da-da-da. But the point I'm making is the warranty. Warranty is very important. It is. Now, gosh, there are some big brands, let me leave it like that, that offer you 10 years warranty on your vehicle. Look at them. This is not a car interview, so we're getting it back. But what I'm saying is peace of mind. You're paying an extra £50 to £100 more on top of your car payments for a month, and that sounds like something, but like you said, like I agree with, there's a problem, warranty, it needs a service, you don't pay nothing because you're already paying. Smash right off, we're going to pay you everything right out. You know, peace of mind is back to the point, so important. So carry on, my bro.
And it's an interesting point. How many people do that for the car?
You know what? You have to sell it, bro. You have to sell it because most
so many people have paid for extra warranty or pay for extra service plans or pay for all of these, pay for car insurance, and they'll spend a fortune on that. The whole thing, insurance, warranties, service plans, all that stuff might add up to £200-300 a month, depending on the vehicle and the age of it and all that kind of stuff. And then I'll say, here's £50 a month to make sure that your family are never going to be, without your income.
Facts, Tom. I'm with you. I'm with you.
And that car is with them for a few years, and then it's gone, and it's a piece of metal. You're talking about the lifestyles of your family and protecting yourself from ever having, financial struggles. So
I'm glad I put that example in there because that's give me another outlook on the situation, but that's definitely give them a different outlook on the situation as well, because we tend to focus on the material in the sense of we pay more for the material and pay less for ourselves. So we don't even frigging get massages that we need. We don't, look after our skin. We borrow these skincare products and all of this and that. But do you know what I'm saying? We don't look after ourselves individually, but we've got to have the fastest car. We've got to have the fattest hairs. We've got to have the new Balenci. Whoever they may be. Do you know what I mean? Nike, I've got to be fitted out. I've got to be kitted out, but then just spend a little bit.
Yeah, it is expensive. I used to do this thing where I used to, and if anyone's watching, sort of do this in your mind. So I used to say, okay, draw a picture of your phone. And they'd be like, what are you talking about? I said, draw a picture of your phone. I said, okay, cool. Draw a picture of your car. And I go, okay, cool. I don't know where he's going with this. Draw a picture of your house. Okay, cool. I said, now draw a picture of yourself. I said, okay, just put a value of how much your phone is worth above your phone. And I go, £1,000. And I go, how much is your car worth? And I go, 15 grand. I go, how much is your house worth? I go, 250 grand, 200 grand, whatever. And then I go, how
much you?
Yeah. So just think about how much your salary is, and then take that from now until retirement, and then add that up and put that above your head. And then they'll go, whoa, fuck, that's quite a lot of money. And then I'll go, okay, which ones of those you got properly insured?
Right. It's true. We got house insurance.
Yeah.
We got boiler insurance. Yeah. We got home serve insurance.
Yeah. You got your fridge insured. Your cooker.
Yeah. Your
all of these
pipes, everything. And then you got electricity. Then you've got you insured if you have a blowout or anything. Yeah. Then you've got your car, your gap, all of that we just discussed.
Yeah.
So you're
insurance.
Right. Mm-hmm.
And they're like, and there could be a fortune that they're paying to make sure that all of that. I'm not saying that all of those things are wrong.
Not important. Yeah, I'm with you.
But it's how you prioritise. It's that perception and reality of actually, I'm worth quite a lot of money, and to my family, I am worth a lot of money between now and when I plan to.
Without me, none of this is possible. It could be this podcast. It could be without you. This is not possible because who am I talking to? There's no. Because it's not here, so it's true. You're very right. Without me, without you, none of this is possible because someone's going to be lacking. Yeah, someone's going to be. So carry on, bro.
Exactly. Sorry. So it's a huge conversation around it. And the other thing that I would say, by picking up again on something that you said, is like I'm a financial services salesman, which all people in financial services are, I suppose. We're all here to sell our products to fix your problem.
So sell your services.
Exactly, but I prefer to see myself more as an advisor because when I'm an advisor, and which is what I am, regulated, I've done a lot of qualifications to get to this stage where I know what I'm talking about inside out. Thank you.
Well done, bro. I'm gassed. Well done, bro. But
when that's the case, and that's where financial services is different, when I'm sitting in front of someone and saying, maybe you should consider this, I'm not a salesman who has been doing this for 5 minutes and has, learned about the product and knows the unique selling point to make it work. I'm saying, I know that this works and it's something that will definitely help you. And I can say that with my chest, and I can walk away from that interaction knowing that whether they take it or not, I've told them about the best thing to do for them.
Yeah.
Because I'm heavily regulated, so I can't not do that.
Yeah, pick and choose what you share. Yeah,
because what I do gets, looked at, evaluated by other people,
reviewed,
to say, are you doing this correctly? And if I wasn't, I couldn't be an advisor.
100%.
So financial services is generally, especially more now so than ever, something you should be able to trust. So someone you should be able to have a sit-down conversation with. And if you find an advisor that you like as a person, that you get along with, that you can have a good chat with, then that's like double the amount of benefit, because they will be able to sit with you and get you. Sometimes I sit down with people and, we're not on the same page. We're in different stages of life. We haven't got the same kind of lifestyle or life experience.
Yep.
And sometimes the chemistry isn't there. And I could say exactly the same to them as I would do with someone who had a little bit more in common with. And the way that it would work.
It's different.
Exactly.
Totally
and so
different.
There's financial advisors out there like me who don't wear a suit. There's financial advisors out there who are middle-aged men who will turn up with a briefcase and they're tied on perfectly. And you've got to try and find the one that you want and trust the most to get, the right outcomes for yourself.
I'm really proud you brought that up. The last point, I know it was stretched, but the gist is you're an advisor, not a salesman. And I'm really glad you brought that up because, okay, as a salesman, you do your best, but then you're saying you are seen as aggressive. Aggressive is in go after. You go after. But if you're an advisor, people come to you. So I'm not going anywhere. I'm here to signposting and pointing this way. Yeah, stop here. Yeah, this way. Do you know what I mean? Yeah. So that's very important. I'm glad we discussed that, because for other people that are about to contact you and just have conversations, it's so important that they understand that as well, because now we've already gone past the funds, so we know it's not going to cost until we're into it. But then we also have to understand, like, people buy from people. This is what I learned in sales school. I know I'm talking about sales again. I apologize.
No, it's important.
People buy from people, and it's the same with the advice. If I've got to walk to someone signposting, I better get a good vibe off them when I get there, because if not, I might as well have not spoke to them, because I'm just you said go left, I'm going right. Why? I didn't like how you said that.
Exactly.
I didn't like how you said that. Do you know what I mean? You sound like you're trying to lead me up a street somewhere. So I totally get it, and I'm very grateful just for you clearing up that difference between a salesman and an advisor. That's
but
very
don't get
important.
me wrong. I think there's still an element of I have got to go out there and get it.
100%.
You've seen on socials I'm active.
That's only in a business though, my bro. As a business, you have to go out and generate more business. You have to, show people what you have to offer. You have to put yourself about, your face about, your brand about, whatever. So that's not sales. Sales is you won't get this without me. That's sales. Because I can go and get it.
Yeah.
And that's a car. And that's still sales. I can get this billions of the same bloody car. Do you know what I mean?
Yeah.
But an advisor's like, well, you know what? I'm here anyway. I'm happy to help you. If you've got 5 minutes, I can have a good conversation. If you're looking to invest into something, I would like for you to just be cautious. And if you're really serious about something, hit me up before you make your decision.
Yeah.
That's an advisor.
Yeah.
Wow.
Yeah.
I feel so comfortable. There's no threat. There's no aggression. And I feel like I could ask the silly question, and then you say, there's no question, there's a silly question. You're like, oh, you're the one. You are the one. You ain't got no briefcase. You're dressed like me. We talk on a vibe, and you tell me there's no silly question, so I can really just let my brain run free.
Yeah,
and
exactly.
that's important.
Yeah, it is, and that's why that financial advice is generally, I think, you will find differences in different advice and different people. But I regularly say to someone, take more time. I'm not, I will see someone sometimes 4 or 5 times before they do anything. And that's because I want to make sure that whatever it is that we're speaking about, it could be something that's really new to them, like investing in something that has stocks and shares or a market exposure that they're just not used to or they're not comfortable with. And so it takes that time to sort of get there and make sure that it's right. And right before I ever do anything, I always say to them, are you 100% sure that this is the right thing for you? Because I want you to tell me if you've got any small gripes, before you go ahead and do it. Especially if I speak to someone who I know is like an inexperienced investor, and they haven't done it before. I want them to know that this is the right thing for them. They can trust me that I've got the right qualifications and regulation. But that they believe in their heart of hearts that this is going to be the right path for them to get where they want to be.
And that type of thing is very important when you're treading on uncharted ground, when you're stepping into something new, whether that's getting a first mortgage, whether that's getting your first car, getting your first bank loan, whether that's changing career paths, whether that's going solo. We all search for that form of confirmation that allows us to go forwards with what we've decided. Do you know what I mean? That's all of us. So when you've got someone who's very easy to talk to, very reassuring, very gentle, but not passive. They've got all of the aggression and all of the ambition and all of the charge. I'm not swearing, but we're not asleep. Do you know what I mean? We know what we got. We know what we can offer. We're confident in it, but we want you to choose us.
Exactly.
I love that. I love that.
And so, but again, I've got that challenge of people not being forthcoming and thinking. No one ever gets up in the morning and goes, you know what, I fancy a bit of financial advice.
Chat with the financial advisor today.
No one ever does that.
It's the weather.
People do that. I've had people sit in front of me and go, why doesn't everyone do this? Because I'll sit down at the end of the meeting and I'll go, I understand what my pension is, what it does for me, how it works, way better. I understand what my protection. Some people are paying for life insurance or financial protection that just isn't. It doesn't even do what they want it to do. They've just chosen it off the shelf and gone.
They're not aware of the benefits.
It must be the right thing for me. And so having clarity with your financial position allows you to just focus on the rest of your life. Let's be honest. Money can make you happier in moments, but it doesn't make you truly happy over time.
It doesn't, and it isn't everything, because if someone said you get £1 billion, but your last week is this week, you say, well, we're on Friday. Do you want it or not? Well, no.
Exactly.
So, yeah, it's perspective, it is.
It is. But it's so important. People of our age, 20s, 30s, 40s, we're in a situation, really, where our retirement is looking far more bleak than the ones who went before us. The way it used to be is, like, people who are like in their late 50s, 60s now, they'd get a job, they'd work in that job, probably wouldn't change jobs many times through their life. That's true. And then men would retire at 65, women would retire at 60, they'd have a nice straightforward pension, they'd have a nice state pension at those ages as well. People our age...
Everything was clear.
Yeah, you knew when you were retiring, that was that. Our age now, it's much more blurred. It's much more blurred, even when you look at things like state pension. So unless you're investing in your retirement, you are getting state pension. If you're under 45, you're getting state pension at 68. There's rumours, and I don't like to comment on rumours, or there's rumours that it's being reviewed to make it 71 before we get state pension. When you get state pension, it'll be the equivalent of about £220 a week. And so therefore, a lot of people our age are being forced into the thought process of, I might just have to keep working.
And that's at today's price, might I add, that 100 and something, how much is that?
It's around about 220, just over £220.
So to say 220 a week, which sounds, okay, that doesn't sound like an amazing amount, but it can help someone.
Yeah.
We're talking about all the way down there.
Yeah.
Where at the moment, if we just go back 20 years and look at what £10 bought and what £10 buying today, then what's it going to do in the next 30 to 40 years? That's where we need to be thinking as well. Like,
Exactly. And that's why it's important to invest your money in the right way. A lot of the videos that I do regularly on socials are around, considering the risks of your money being set in a savings account, for example. A lot of people don't like risk. I want to keep my money safe. And they'll just put it into a savings account. Don't like tying it up in any way, shape, or form. There and ready, just in case I need it. Some people will have so much money sat in an easy access savings account. I'm going, what do you need it for? What is the reality that you're going to be able to have something happen that means you're going to get your hands on half of that?
You could literally take out a tiny portion and put it in the same account, put this big bulk over there, and let it just do something.
So there's risks which are hidden with your money that people don't consider. So it's exactly what you've just mentioned. Inflation happens every year. It's running at the time of recording this video, 2.2% a year at the moment. So that means if you want to buy something now and you want to buy the same thing in a year's time, it's going to cost you 2.2% more. generally speaking. Some things are higher. Food is much higher than that, and other kind of things. But last year that was running at close to 11%.
Okay.
So what that means is if your money is sat in an account, not earning anything for you, in real terms, it looks, say you had £10,000, it looks in 10 years like £10,000. You try in 10 years buying the same amount of stuff with that £10,000, it's not going to happen.
Yeah, it's reducing.
And so therefore, if you've got money that you don't need access to, you should think about, okay, how can I make the most of this? I need to invest it. And that's where people go, oh, how do I do that? And they don't think, let me speak to a professional advisor.
Yeah, it's true. What they think is, okay, let me speak to the closest person to me making money. So if that person's on crypto, it's crypto. If that person's buying and selling cars, it's cars. If that person's buying and selling houses, it's that. You know, it all depends on obviously what your pockets can afford, but it also, no, it depends on how close and who you're close to. So my bro is a financial advisor, so I can actually seek some real advice. But if you're killing it on the crypto, I use crypto because it isn't quick cash, but it can be seen as quick cash. So if you're killing it on the crypto and you're like, damn, you've got £1,000 that you can just lose, why don't you chuck it into this and flip it to 5? Well, that sounds like a great idea, but if that person isn't expert, then that is all risk. Because that's right, you can flip it. There's terms, so it's like, you know, sometimes you can get your money back quicker, or sometimes you have to leave it in there for a good 2-3 years for it to jump up. It just depends on what you've chose to support by shares in whatever. But when you've got someone like yourself who may not know anything about I want Disney shares, I want Rockstar, you don't know nothing about that, but you can tell me the general gist of the ins and the outs, which is going to give me a more balanced perception on what I'm doing before I've started it.
Yeah, and the type of investing that I advise on generally is investments where you spread the risk and you diversify what you're investing in. So, and you can sort of do it for yourself now. There's a lot of companies where you can just, you know, sign up and do it for yourself, and that's fine. And I encourage people to do that if they're confident to do that. But make sure you're doing the right thing, because everything that you do, whether it's crypto, which is ridiculously high risk because you're relying on one coin or often a few coins to change in value in your favor, or if you do diversified investing where you spread the risk and you spread it across numbers of different companies.
Is that like FTSE 500, like them,
there's
man?
The FTSE 100,
there's
S&P 500.
Okay, yeah.
That's a sort of a version of that, which is S&P 500 is American companies, FTSE 100 is UK companies. So it's then 500 companies in that one, 500 in this one. It spreads the risk, different type of companies. But then you can have funds which are not only just in one country, that are spread all around the world. So when one country's doing well, the other one might be suffering a little bit. So the UK, for example, the last few years hasn't been doing particularly well, but American shares have, and other places around the world have. You can have funds which spread your money around the world, so that you're not just in one index and hoping for the best. You're taking a spread of the world, so that one part of your portfolio is always holding you up and smoothing out the fluctuations in the value of your money.
And I do agree with that, because you can do the 100 or the 500, or you can do a small version of that yourself. Maybe not so many businesses, but where you like, I bought 2 of Tom shares. Tom shares are quite expensive. I bought 50 of Dan shares, because Dan shares are a little bit less, not as expensive. I bought some of blah blah blah, and then, like you say, then that's when you can see them kind of keep each other up, and all of that.
Exactly. And so to do it properly and to do it effectively over time, either you need to be really well versed in it and do a lot of work in understanding where to invest, or you just use an advisor who goes, here's a diversified fund, don't worry about how it's invested. We just talk about risk. How do you feel about risk? And then we go, oh, you like taking risk? Cool. There's a fund which has a little bit more of that. And what you're talking about then is fluctuation level rather than the risk of losing it all.
Risk of losing it all.
So, and a lot of people are put off by that. But if you look at the way that markets and market exposure to money has worked over the years, again, I'm putting a video out about this in a few days' time, is that over the last 20 years, if your money was sat in a normal savings account, it's actually worth just over half what it was worth 20 years ago.
Wow.
In terms of buying power.
Yeah.
If that money was invested in something with market exposure, it would be worth probably somewhere in the region of about triple to quadruple what it was. That disparity, and in that 20 years, so many people would have been just sitting on their savings thinking that's the safest and best place for it to be. And it just, when I see someone who's done that, I think, oh,
that's such an angle, Tom. That's such an angle. Like, I talk to always great, man. You're my broski, but nah, that's such an angle that I spoke on it but when you said the 20 years of saving, that hit me like I ain't heard that before. Because it's true, and I literally just spoke on it. But you said that, and it really dawned on me like, right, that's true. So like, I'm putting my money's feeling like I'm doing good, and I'm still only got half the buying power. Where invest it and make yourself rich instead of making the bank rich.
Yeah.
Because that's what they do. They get the money, they invest it. You put your money in the bank. The reason why they don't let you have it all because they ain't even got it all. Okay, not all the banks are near the banks. They're all brilliant. Of course they are.
No, they are, and it's all protected, of course. But the simple sort of way that again that I look at it is, banks make money by holding money and then lending it to people. And people borrow money at a higher rate than they give their savers. So there's always that gap, and you're never quite truly going to be doing as much as you could have done. There's purple patches like there has been for the last year where the base rate's gone up, everyone's mortgages have flown up, and so savings rates are higher at the moment than they have been for about 10, 15 years. But now there's pressure on the base rate to come back down, so that purple patch is going to go away again. But I think about what happens every year. Things get more expensive. Who do we buy things from? Big companies. So they're making more money every year out of us. So if you keep your money in the bank where they've got a profit margin to think about, then you're not always going to get the best amount of money. If you invest in the companies that are charging everyone more every year, your money's going with them who are making more money every year. Do you know what I mean? Inflation happens every year. Inflation has never not happened.
And it's true, if the investments, if you choose the right one, sorry to jump in there, if you choose the right businesses, you're like riding their bandwagon, which is just...
They're making more money every year, so your money goes up in value.
Yeah.
And so you're taking a small part then. Again, if it's invested in whether you do it yourself or if it's in a diverse fund, we as consumers have to pay more each year for the stuff that we want to buy. At least you know that your money's being invested in those people who are making more money out of us, and you're riding that with them. Do you know what I mean?
I do. So I've got a brilliant question. So what piece of advice would you give to somebody with piece of advice for someone with their first spare £100 and a piece of advice with someone with £1,000 plus?
Okay. It's very much the same thing.
Okay, excellent.
And it's not advice, by the way. It's information.
It's not.
And this is, you got to be talking about truly spare now. There's a difference between spare and truly spare. Because again, going back to the example of who's got enough money to make sure that they're covered for a few months. The process I go through is, okay, have you got the right emergency fund in place already? And if they have, and when I talk about emergency fund, what I'm talking about is 3 to 6 months of either your income or the bills that you have to pay.
Yeah,
so that if something happens, you get made redundant, something comes up, a big bill or whatever, are you okay for 3 to 6 months? And then if that's the case, because if it's not, I'll go put your £100 in there, put your £1,000 in there, get your emergency funds, get yourself feeling comfortable that you're
That's
good.
That's a nice advice, bro.
Once you're in that situation and the money that's spare then is truly spare, as in, do you need access to this for the next 5 years at least? No. Okay, cool. So let's make this make you wealthier. And then you would use different wrappers, whatever that might be, which are tax efficient so that you don't pay any tax on your returns. Things like ISAs, things like pensions. To go, okay, what is that money for? Because that £1,000, and it's a really generic answer that I'm giving, so I hope it answers your question, but that £1,000 to you a month is going to be very different to someone who's in their 50s. It's very different from someone in their 20s. You're going to have different goals that it's assigned to. And so it would be, what's the time frame for your goal? When do you want to achieve that by? Okay, does this £100 a month get us there? No. How far can it go to getting us there? If that's retirement, great. If that's something in 5 years, great. But it would have to then be something in that period of time where I then go, okay, let's have a conversation about risk and how you feel about it. Get to the whole thing of, where do you sit in terms of how comfortable you are with your fluctuation of your money over time, and then put some tax efficient wrappers in place for them to go invest it here, put it into a diverse fund, let it do its thing. Don't worry about it too much. Let's let the fund managers and the investment managers do their thing with your money. Just invest it, leave it, look at it once a year, and then look at it at that point that you were planning to be, whether that's retirement or whether that's wedding in 10 years or whatever.
What you said.
And then assess how wealthy you made yourself. It's really generic, but that's the way.
No, that's brilliant. And the thing is, though, what you have to. Okay, it's just how I speak. So I'm always correcting myself as I speak. So I've got to work on that. But what I was going to say is, what you have to understand, not like you don't understand, it's just how I speak. That's what I'm saying. But what you got to understand is that person there. There's loads of different people there. It's got to be generic. You can't talk to me and tell just me because the 50-year-old say, "Oh, what about me?" The 20-year-old saying, "I got too much peas." Do you know what I mean?
Exactly.
The 40-year-old saying, "Well, okay, I've started to put some away." So, and then it's getting all personal. So that sounds brilliant. It sounds absolutely brilliant. It's very helpful. We are all grateful for you. We're all grateful for the advice. I mean that with my heart. I've got to go above the mic. Someone's fucking knocking it. But yeah, I mean it with my heart. I really do, because you go out your way for people, but the information you share is A, information that could be charged for, or B, information that is a pivotal point in someone's life, you see, because someone's beating their head up against the wall because they want to change something, they want to save something, they want to start, they don't have a lot to put away, sometimes it's like 50 quid.
Yeah.
And it's encouragement to start, and that start then becomes part of your snowball that you gather more momentum and meat on the bone, and before you know it, you know, I know I said snowball and meat, they don't mix, but clearly in this sentence they do. But you know what I'm saying? Like it adds on. And then before you know it, you've got something that you've got momentum is the point I'm making. Yeah. But you have to start somewhere. Yeah. So I'm very grateful, and we're very grateful because you've dropped some right gems, and I hope everyone is listening. And I mean that because it's one thing being a fly on the wall, but then being a fly on the wall and then doing nothing with the information is like a waste of everyone's time. It's a waste of your time. It's a waste of our time. And not necessarily a waste, like aggressive waste, but you know what I mean? Like if you're a witness, say then, we are millionaires, but not in this current moment. But if you so happen to be a witness to a conversation between two successful people, then say, would you take something from it, or would you just be the third party? And this is not a question to you, but I'm saying, like, do you know what I mean? Like, would you take something from it, or would you just be the third party and walk away? 9 times out of 10, if they've got something you don't, you'll take something from it. Do you know what I mean? So I feel like this is definitely a conversation that any of the viewers can take something from. Hopefully. Yeah, definitely. We have a closing tradition on this podcast. So it's what 3 things are you grateful for? So what 3 things are you grateful for? It could, just before you start, it could be anything very brief, or it could be in depth. You know, it could be solely you, it could be your children, your family, anything. Okay, cool. So first thing is my positive mental attitude. Perfect. I don't want to sound big-headed that I'm so positive or whatever, but no, but you know what? It's something to be proud of, and self-love and self-worth is extremely important. It's not the problem with the world, but one of the big problems is we aren't allowed to appreciate ourselves. We get penalized for celebrating ourselves. So you be proud of your outlook, because I like it too. What it does is it allows me to take things head on and not worry too much about what might happen. I'm always thinking what good could come out of it, starting my own business or whatever it might be. How can I make it work, rather than look at all the things that could go wrong. And so I'm really grateful that that's the way that I am. Like, no problem ever seems too big that it can't be fixed, and hopefully I can hold on to that and never become miserable. No, that's excellent, because as well they say you go towards what you focus on. So if you want to avoid the tree, focus on the trail. Don't focus on the tree, because that's where you're going. Do you know what I mean? Now, it sounds funny and we can laugh, but it's so true. Like, I got to avoid the tree. I got to avoid the tree. I got to bash. Well, I've got to stay on the track. You stay on the track and you tell yourself you've got to stay on the track, then that's what you focus on. So I agree. Second thing is, and this is going to sound like a weird one, but the time of year that it is. So we've just come out of the summer. And you know what, I had a great summer. I'm not going to say that I didn't. Had a few breaks and this, that and the other, but it's sort of taken away my focus from where I was heading. And it feels really nice to, rather than letting a few things drop, just to get my head back in what I'm trying to achieve, focus, get some momentum back in. Speed up all of those breaks to the same tempo. That's it. And, just take this break now to go, okay, you've had a great summer, let's make something happen for the rest of the year. And so I'm really grateful for the point in the year that we're at. So. And the third one?
and this is quite pertinent because they just came in and interrupted us. I don't know how much of that will make the final cut, but she's over there banging on the window. Nightmare. Yeah, it's my kids.
They're amazing, bro. They're amazing. They're beautiful. They are literally your two's doubles, but they're amazing little souls. They
are. They're funny, and you know what it is with kids, they sort of keep you grounded and keep you real because you know, sometimes, and I've just mentioned my positive mental attitude, but sometimes you'll be sat there thinking, oh, how do I get my head around this? How do I make something happen? And then your son will say something about something that he's unhappy with, and you'll say to him, you don't need to worry about that, son.
That's not a problem. Make sure you get a real problem.
But it makes you also think, I can't preach that without you just letting some things go.
What am I complaining about?
Exactly.
It's not that deep.
No, exactly. And being a parent is tricky, but a lot of the time it brings you moments of like joy, and you can just all of the stuff that you get into as a grown-up, as an adult, as you know, living your life, all of those things get taken away by the way that your kids act and the way they are around you.
Bro, my daughter holds me accountable. She will I will say that and she's, Dad, I'm sorry, baby.
You're saying about me, though.
And that's what I'm saying. You're Captain America. Keep me looking fresh on my thing, dotting my T's, crossing my T's, dotting my I's and all of that when I'm talking officially. And then she is the one that, so you're the one, my electronical communication, emails. My text is like so professional because I'm like, I'm talking to Tom.
Funny.
Voice clip, I can't hide myself there.
Yeah, that's it, yeah.
But if I'm texting you, I'm like, right, make that more professional there. And then she's over on the other side saying like, no swearing, stop this, but it is amazing.
Yeah.
I was going to say how funny, moments do you have when you see your children? You see yourself in your children. They do something you do and you're like,
and other people see that as
well. And
like, they'll do something. They'll do something, and I'll feel, and your wife will go, "That's you.
That's you. That ain't me. That's you."
Yeah, funny. It is funny.
No, it is, man. I'm so grateful. I'm really grateful to be here. Do you know what I mean? We've made it happen. This has been something we've been planning, and as I say, like, you know. We're very grateful souls, but we're also grateful for the presence of each other. So I am grateful they get to hear just one of our conversations, because not everyone has a financial friend. It doesn't matter what you want to, they don't have that as unofficial is what I'm saying. Not a lot of people do, and when they do, that person don't want to talk back.
Exactly.
They're not begging. I did this all day. Check me at work.
That's it.
I'm really grateful for our conversations, but I'm grateful they get to hear one of them, and it's just, you know, the opportunity to express yourself, to showcase. That's it, showcase, not sell. Showcase what you can do, what you offer, what you're about. Spread the good word. I'm grateful for that. I'm grateful that they've got to have some free information, see how approachable you are, see how much like them you are, because you are, like, everyone is alike, but sometimes you see the briefcase, or you see the suit, or you see the you see the big bank balance or something, and you think, oh gosh, you know. But when someone's relatable, you're more likely to open up, you're more likely to be yourself, you're more likely to ask a question that you think may be considered silly in your brain only. And that was brilliant. And that I'm really gassed, bro. So thank you.
It's been a pleasure
today, man. It's been an absolute pleasure, my bro. Absolute pleasure. I've loved it. I really have. Today we won. I'm very grateful for you guys. What 3 things are you guys grateful for? I'll be very intrigued to see those in the comments, if I'm honest. After hearing this conversation, it could be your general stuff, or it could be something to do with the convo. I'm intrigued to see what you guys are grateful for. But today we definitely won. So big love and respect to you all. Have a great day, and I look forward to seeing you again. Peace.